Hello everyone, sorry for the slight delay, 4 minutes late today, but this is our live streaming session where we take a look at what's going on in markets and really what to look out for in the days ahead. We've seen a bit of a lift over the last 24 hours for quite a few assets, and it's really off the back of the US going to be having discussions with China again on the trade war talks. So we've seen quite a lift for stock markets, a lift for oil. So we'll take a look at all of that while we're going through. And as usual, if you do have any questions while we're going through this, if you just use the chat box in YouTube, if you're watching this live, just put something in the chat box on the side. I'll try and answer them as I'm going through. And if there's any particular markets you want looking at that we don't cover, we cover the major stuff, stock markets, commodities, a few of the major currencies, that sort of thing. But anything we're not covered, just let me know and we'll take a look. So let's get into it. Let's drag the platform across. What should we start with today? I think maybe let's start with oil. You know, we've seen plenty of volatility in the oil price in recent weeks, and we saw it. I'm assuming it was off the back of what am I talking about? The trade talks. Yeah. So let's bring up the price of crude oil. It's trading around about $54 a barrel. Let's just bring up the daily chart on this. Here we go. So this is what. Why's my screen jumping around like that? Hold on a second. Let me see if I can fix that. I think I'm having some slight resolution problems today with my screens, and I think it's making it a little bit jumpy, but hopefully that's got rid of it. Unit sizes, get more money out of this, but right, let's try again. Here we go. So here's our daily view for crude. It's been a really interesting year. You know, clearly we saw this massive recovery into April. The price of crude trading up $66, $66.50 a barrel. Big sell-off. We've talked about this over the last couple of weeks. And I think it's interesting that $50 a barrel has stopped the decline. So something of a psychological level, bit of support area around about $50.40 on the way up. This little dip we had in mid-Jan. And again, we had the dip back mid-Feb down to about the sort of 51 area. So clearly a lot of support for oil in the low 50s. Here's the move yesterday. So a big move on Monday. We saw the price close at 52. Yesterday, it had pushed as high as almost 54.5. So a sizable move for the price of oil. So I suppose the outlook now is, are we going to see oil start to build a base down here? I still think we'll see oil have another look up at the 60 plus area. So for the next few months, I still be reasonably bullish on oil. But also, I think it's arguably too soon to start thinking the base is there. So I think for the more patient trader, if you did think that oil was going to have another run back up, it's probably still worthwhile sitting on your hands, because even though we had the blip up yesterday, we've stopped ahead of those early June highs at $55 a barrel. And also it was a bit of a level back there. We'll take a look at the hourlies in a minute. I think we need to start clearing 55 to make it start looking as if there's a proper base in place. But looking at the RSI down here, so all the way down, we were seeing the market sell off. The RSI was dipping into oversold, very heavily oversold down here. And we are seeing the RSI now trying to sort of turn things around and form an uptrend. So it is adding to the argument that maybe the worst of the slides for oil are over. And I suppose if you really wanted to be a buyer now, the obvious place to have your stop, it's going to be about $4 away, but it's the other side of 50. You could say that maybe this downtrend's over. Let's take a look at that in a bit more detail. Let's flip this over to an hourly chart and just take a look at things. So there's the move yesterday. The surge yesterday started about 10 o'clock UK time. Let's just take this right back. So I suppose, you know, if we were picking up on this downtrend from the 21st of May, let's just pick up on that and see what that looks like. Do you know how they got on? Hang on a second. Where's my trend? Oh, am I clicking the wrong thing here? Yeah. There we go. So if we pick up on those highs looking something like that, that trend looking something like that. That is encouraging. Yeah, the move we've seen over the last day, couple of days, does suggest that maybe finally this downtrend is in trouble. But like I say, I think we really need to clear these old highs. Let's just zoom in on them. These highs from up here around about 55. You can see we had a go yesterday at 54.5, a little bit nervous. We do have the oil inventories out this afternoon, so we can normally get some volatility off the back of that. We've got the US interest rate decision this evening. So again, volatility expected, but I think 55 is the level. Saying all that, if we did see oil get knocked back down to the 52s again, I think that looks like a trading opportunity, you know, with stops the other side of these lows, just the other side of 51. So I think it's interesting. It is starting to look as if maybe the weakness is coming to an end. We are seeing 50 being something of support, but I think we need to get a move on through 55 to confirm that maybe we're going to see a deeper recovery back up to these 60s again for the oil price. So a really interesting market to watch down here. And I think probably the daily chart's the one to keep an eye on, just to see, you know, how we perform after being stuck in this range for a bit of June, bit of strength yesterday. But let's not get too carried away because 55 is still a barrier. But definitely one to watch, I think, the price of oil. As we're on commodities, let's take a look at gold. Let's take a look at that one. So we'll bring that up. As you know, if you've been watching these for a while, you know, I've been bullish on gold since the sort of last quarter of last year. We had this recovery that had been in place since the August lows. It was really confirmed probably in October, where we'd had the third touch on the trend line. Perhaps the more patient would have waited here for November. But either way, I think, you know, clearly, since there, the argument has been to be buying into the recovery. We saw the market run all the way up in mid-Feb, traded up to 1348, that sort of level, 1347, with this big correction that was quite frustrating for gold bulls like me, waiting for the market to move its way up again. And then finally, we've had this move. It did move, the price of gold did move to fresh highs for the year a week ago. So we did punch as high as, what, 1358. The market's currently 1342. So for me, that trend in gold is still up, and I'm still long gold. I still think there's a bit more to come on the upside, but would you want to buy here? That's the question. I think, you know, would you be want to buying into gold at 1342? And I think there's a couple of reasons to say, well, maybe you probably wouldn't. You know, what would be the closest you'd have your stop? If I was a buyer now, the closest I would want my stop is the other side of these lows. So these June lows at 1320-ish, June the 4th lows, same sort of area. So I'd want my stop loss at least $22 away from where the market's trading. Plus, we really need to bear in mind with gold, we're back into something, getting near to something that's been a massive problem for the gold price. You know, 2018, Jan 2018, the market punches up near 1370, runs out of steam. Going back to 2016, the market got as high as 1377 and then fell off a cliff. So I think there's definitely more upside to come, but we need to be aware of it running into some problems not much higher than here. Saying all that, let me just flip this over to a weekly. You know, if we manage to clear, I don't know, let's call it 1390, right? So it's $50 above where we are now. If we manage to see gold through that, then I think we're looking at possibly the start of a much bigger recovery for the gold price. But that hasn't happened yet, you know, so let's just be a bit patient here. So I do think in the short term, let's flip it to a daily again. It's still strong. It's pretty overbought. You know, it's hanging around overbought at these levels on the 10-day RSI. And that RSI has not done a bad job in the past of calling, you know, temporary tops. So I think we need to be a little bit cautious. I think the bigger opportunity is if we saw a mini collapse in the gold price, sort of back below 1300. Back to this sort of zone, back to that trend line again, then maybe we have a buying opportunity. So I think we've got further to come on the upside. Let's be aware of these problems, and it's maybe a bit overstretched in the short term. Let's take a look on the hourlies quickly, because this will be one to watch when we have these US interest rate decision this evening. No change expected as usual, but we normally see some volatility for gold. You know, we've got for really short-term traders I suppose you could be looking at this 1330 area. Has held the market up over the last week. After that, there's that big 1320s coming in, these sort of levels here. So we'll see what happens. So I'm still bullish, but I do recognise it's a bit overstretched up here, and we're running into or pretty near areas that have been a problem. So there's the gold price up there. Let's take a look at some of the FX markets. Then we will flip it and have a look at stock markets, because they had quite the move yesterday. So let's bring up pound US dollar. So there's a lot going on in the UK at the moment. We've got the election, not the elections, the Tory leadership campaign. So there was the debate on the BBC last night with the 5 people left in the campaign. It wasn't the most entertaining TV, I don't think, but talking about Brexit and are we going to get out by the end of October, all that sort of stuff, clearly has an impact on the pound. I think the pound is interesting here for the same reasons it was interesting back here. We are back down to levels down at 126 to the dollar that have proved to be a major turning point for the pound in the past. And I remember a week ago or a couple of weeks ago saying, look, maybe we'll see it turn around here, but I don't think there's any need to be urgent. We got a good recovery from 126, pushing up to sort of 127.50, so 150 point move, but it's given it up again over the last week or so. But I think it's all still valid down here for the potential for the pound to form a major base, because we go back to December lows 124.85. We had that spiky move in January, 1 day move down to 124. So the whole 124 to 125 area has been big support for the pound. If we look at the RSI down here, this looks pretty bullish. So we saw the pound come off from 132 in May, traded down to 126, 600 point drop in under a month. But we're seeing that this RSI, even though the market is making a low, moving lower still, and then moving lower again yesterday, we're seeing this RSI making higher lows. So this is known as bullish divergence. So it can be a suggestion that maybe the weakness is running out of steam. So I think it's really interesting down here, pound against dollar. Again, I don't think we're going to wake up one day and see suddenly it's back at 132, because I think we need a bit more clarity about the UK political situation, what is actually going to happen regarding this October deadline for Brexit with the EU. So maybe we have just some chop down here, but I do think it's interesting down at these levels. And I think what's also interesting is the fact we broke below those lows, those old lows on Monday, breaking below the end of May lows, haven't seen any follow through on that, and the market's turned around. So I suppose the aggressive trade, if you really wanted to do a trade down here, let's flip it over to the hourlies. The aggressive trade would be, let's say you're a buyer now at 125.78-ish, and you've got a stop loss below the low from earlier this week, well, actually from yesterday, at 125. Okay, so you've got 80 odd points risk. Let's call it 100 points. Let's call it 100 points risk. Let's say your stop goes in at 124.75. You've got 100 points risk. If the thing does start to claw its way back, there's maybe a couple of 100 points upside to here, and maybe even further. So I think that's the aggressive sort of trade on that. The more patient is just to see if we continue to hold above these old lows. But I think they're really important. I think if we see the pound start trading below 124, that would be the sign that sentiment really has shifted. And I think the risk is then for a deeper sell-off. Someone's just asking in the questions, any suggestions on gold? I don't know if you're late in, but we covered that about 5 minutes ago. So if you go back, if you're watching the live stream, you can click back and go back to gold. But it looks still bullish, I think, but maybe overextended. So there's the pound against the dollar. So personally, I still think we might have a little look up at 127s. Again, this is a really important area, expecting it to hold. Let's see what happens. Let's take a look at the euro. So Euro's done the same thing it always does. It looks like it's going to have a recovery, and then it just, to use a technical term, just craps out in a couple of days, and we're back again. Okay, so we had this. I think what was interesting in the euro, we'd had this decline since September last year, and it looked like that. There we go. So we'd had this decline since September. So the euro has been edging lower every couple of months. This is euro US dollar, breaks to new lows, but then recovers and then stages a strong comeback, breaks to new lows, has a recovery. Similar thing again, the 111 level holding end of May, and we push up to 113.40, And lo and behold, we've dropped back 150 points again over the last week or so. But I think what was interesting when we picked up on it, I think last week, or was this breakthrough this trend line. It's the first time we've seen this. What is it now? It's a 7-month, 8-month downtrend in euro against the dollar. Has a go, sells off. What's going to be interesting is what happens next. So I suppose, again, I think there's a couple of ways of playing this. I do think that maybe in the last 6 months of this year, we could see a euro comeback, euro US dollar comeback. So if you thought that was the case, I haven't done anything yet on it, but one trade is to be, let's say we're a buyer now at wherever it is now, 112, near enough, and a stop loss below those old lows at 111. So we've got 100 points risk, maybe a bit more, chuck a few more points on, 130 points risk. If it sells off, we're expecting these old lows to hold and for it to resume the move back up. And if we did see a stronger recovery in the second half of this year, I don't think it's ridiculous to see us start pushing out to fresh highs for 2019. Maybe looking at that 118 level. So maybe if we see the bigger turnaround from here, there's maybe 600 points upside up to those September highs. But it is conditional on these old lows holding, these old lows at 111 holding. So I think it's an interesting one. We could have a quiet day today because we've got this US interest rate decision tonight. Let's just flip it over to the hourlies to take a look at that. There we go. So it's pretty inconclusive for the hourlies. Sharp sell-off yesterday on dollar strength, I think, because of President Trump deciding to talk to the Chinese president, and then nothing much since then. Okay, so let's see. I think it's going to be an interesting few days for the euro. We'll keep coming back to it and see whether we're going to see the start of some sort of recovery building on this one. So that's euro US dollar. Let's get into stock markets. So let's have a look at, well, actually, let's look at Bitcoin. While we're flipping on currencies, let's look at Bitcoin. Bitcoin is still positive. We saw it push up as high as 94.60 a couple of days ago. I think 10,000 is the obvious big hurdle for Bitcoin. So it wouldn't surprise me to see a bit of chop up here. 10,000, big psychological level. Plenty of old holders of Bitcoin who came late to the party, who've sat on massive paper losses, who, if they see the thing at 10,000, will, I think, be only too happy to offload their positions for much less of a loss. But I think that's the level to watch. I think if it starts breaking 10,000, we could see some more momentum on the upside again. So at the moment, I'd still be inclined to be a buyer of dips in Bitcoin. We've got old support left at around about 7.5. These are a long way away because of the volatility that we see in this crazy market, and then bigger support at 6.5. So for me, I think even if we saw Bitcoin drop a couple of $1,000s from here, it still looks like a buying opportunity. But 10,000, I think, is the big hurdle on the upside, is the one that needs to be cleared. But still bullish and still having a go at pushing higher. Right, let's take a look at stock markets. We'll look at the S&P. It's been a really dull few days for the S&P, but again, sparked into life yesterday. So look at this. Look how boring this has been. So if we go to the 7th of June, right, 7th of June, big move on the 7th of June, but then look at it from the 9th to the 17th. Just look how tight the ranges were. Incredibly dull, I think, not really changing that much. But we got the big move on yesterday on these talks between the US and China. Really weird looking RSI because the market had been so flat, then suddenly surges. I think, obvious levels to watch on this chart, big levels to watch. The old highs from beginning of May up at 29.60. I suppose if you thought actually US stock markets are overvalued, they're getting too excited about these trade talks. It's a stupid move yesterday. It's a good level to go short. If you're going to go short anywhere, you've got an obvious reference point for a stop. Okay, it's a big stop, but if you're looking for a bigger sell-off, maybe back to 2,700, you've got the obvious reference point of the highs from late April, early May. Let's flip it over to the hourlies. Then we'll take a look at the Dow. So this is what it looks like. We'd had all this sideways stuff going on. Not very exciting. and then bang, this is where we are now. So I think maybe the opportunity today is, and again, I think we will have a quiet first half session because of the interest rate decision this evening, but maybe the opportunity for today and possibly the rest of the week is if we have a bit of drift today, back into the range from yesterday. So I think that for me would be the more interesting trade. If we see a bit of S&P weakness today, broader stock market weakness, looking to see if the buyers start coming back in, so we've got a better risk reward on the trade there. Let's have a look at the Dow, then we'll bring it over to the European markets and look at the DAX and the FTSE. So here's the Dow, similar sort of move yesterday. Of course, the market was trading at 26.1 yesterday, and then by the close was up at 26.5, 26,500. So the market put on 400 points yesterday off the back of this news. Again on the Dow, we've got the old highs left from May, just above 26,700. So the possibility for a bit of a squeeze higher from here, but this was quite the hurdle. April, May, 26.7 on the Dow. So at the moment it seems unlikely we're going to go sailing through those levels. But again, looking at the market today, perhaps the opportunity is if we see a bit of weakness, do we see the buyers looking to get back in the low 26,000s? So quite a sharp move yesterday. And let's bring it back to the European markets. So the DAX. Let's flip that onto the daily. Here we go. So the DAX, again, the big move yesterday on those trade talks. Highs left at 12,450. So about 130 points above where we are now. Those are the May highs in the DAX. A little bit treading water today after the surge yesterday. But again, I think if we get a sell-off, that's maybe the more interesting trade. I think it's always difficult, I found it difficult on these stock market indices the last couple of weeks because it has been so relatively flat. Then you get a surge like yesterday and you're either in or you're not, and it just the market, if we flip over to the short-term chart, that's when the move starts, 8 o'clock yesterday morning, and the DAX puts on about 160 points in less than an hour, and then did push higher the rest of the day. But personally, I find those sort of moves quite hard to trade. Let's see what happens. Let's see what happens with these markets this afternoon and with this interest rate decision. Hopefully, it means we just get a bit more volatility on Thursday, Friday, and not the dull sort of markets we've had recently. And then finally, the FTSE. Then I'll get into the questions. So here's our FTSE chart. So FTSE 100, the blue chip UK market. Again, the move yesterday moves out to its best levels since the end of April. Trades up to about 74.70. We've got highs left almost bang on 7,500. Oh, sorry, I'm talking rubbish. 75.37 from April, third week of April. It's giving up quite a bit already today. And I think the pound strength will not be helping the FTSE there. But big support left over the last couple of days at 73.20 for the FTSE. So again, if we get a bit of weakness, be watching to see if the buyers come back in. So that's it, really. I think maybe the more interesting market to watch medium term is crude oil because of that move yesterday. But again, I don't necessarily think there's any rush to go piling in. But at least that decline has showed signs of stopping, and I'd be watching to see if the market's going to reverse. Then pound US dollar, because again, what's happened there? So again, we've seen something of this 125s being important support for pound against the dollar, and a lot going on politically in the UK. And then stock markets, because of the surge, let's see if we have a return to more normal markets. Right? I'm going to get into the questions now. So if you've got any questions, fire them into the chat. Someone's asking about sterling euro. It's Nicholas. Is it too premature to go long sterling euro? Let's have a look at it the other way around. Euro sterling. Here we go. Let's bring that one up. Okay. I mean, I'm surprised by how high this one's pushed, to be honest. But there we go. That's what stop losses are for. So we've seen this market, the euro against the pound, go from 85 in May up to 89.70. So if you're going to go long sterling euro, the question is it the right time to go short euro sterling here? Massively overbought. It's the most overbought it's been, we've probably got to go back at least to there, 2017. And actually, it looks like it's been more overbought since then. And a similar sort of move, almost like a bit of a crazy surge and then a sharp reversal. I suppose if you thought the euro move was overdone against the pound, it's a good opportunity to go short. I think the aggressive trade, I wouldn't go short maybe today, because it was only yesterday that this move hit its best levels since Jan. So we were on a 5-month high yesterday for euro sterling. But it's interesting because 90 to 91 has been such a problem for euro sterling. So maybe if we saw a weaker finish today, round about here, wherever we are, 89, maybe that's the trade, to go short with stops. The closest I got my stop is above yesterday's high, so above 89.80. Perhaps the more patient trade is to wait for maybe 1 day of strength. Does it fail to break that high, turns down again? Maybe that's the more disciplined trade. The risk is, of course, that you'll miss out if it reverses sharply. But that's what it looks on the hourly. Yeah, so that was the move yesterday. But for me, I would be thinking probably the same way you are, that okay, it's had a good run, but this has been such a problem area. Perhaps it's time for the euro to start rolling over again, and we see this euro sterling drifting back towards maybe the 87 area, that sort of thing. Let's see. It's an interesting one to keep coming back to that because we've seen such a surge. Sterling yen, the old favourite. Let's bring up the sterling yen chart. GBP, JP. If I could spell it, there we go. Let's take a look at that.
I know. Yeah, like that.
It's interesting, isn't it? It's really started breaking down again with this pound weakness. It started breaking down, hasn't it? So I suppose, I mean, if we were looking at this on the hourly, let's flip it over to the hourly chart. That downtrend, look at that downtrend. If we go all the way back to May, I think that downtrend is still intact. Okay, so if we're going to pick up maybe a 4-hour chart, we'll be a bit clearer here. Let's bring that up. There we go. So if we went off those May highs, so we're looking, something like that. And I don't use trend lines as a religion. I don't think that they work absolutely all the time, but I think it's always a good idea to put them on the chart just so you're aware of which way the trend is. So looking at this, the trend for the last 6 weeks, sterling yen is down. Looked like we were breaking out of it there, but we've gone again. I suppose that perhaps the sensible trade to go with the trend is to look to be a seller. I mean, it's been strong the last few hours, but for me, 138.50, 138.40, that sort of area, these old highs, you'd expect to be a problem. So maybe if we had the market blip up to here, it looks like a good short opportunity. If it breaks 138.50, then I think we can start looking at reversal. So for now, I'd have to say, going with the trend is still down. We do have a lot of support coming in just below where we are now. So if we're going to reverse, then maybe we're going to start to see it. But for now, that trend is still down. So I'd still be tempted to be looking for short opportunities in sterling yen. And Facebook, someone's asking for Facebook. They had a half decent move yesterday, didn't they? There's a video on our channel on Facebook from maybe a couple of weeks ago. And I think I actually called the bottom in Facebook, but didn't buy any, so it doesn't count, does it? So this is the daily chart on Facebook. So I thought what was interesting when we did the video on Facebook was we'd had this great recovery for this year. So let's pick it up. Let's pick up the recovery as we've seen for all these stocks this year. Obviously, we'd had the recovery in Facebook this year. Look, something like that. Let's just get rid of the RSI for now and focus on what the price is doing. So the recovery in Facebook. So runs from about 123 a share up to 198 a share, falls out the trend line. But again, I think just because something's fallen out the trend line doesn't necessarily mean that trend is over. But when I did the video, I thought this is such an obvious level. These are 160s, 159s, 160s on Facebook. They've been, after that gap up on earnings end of January, they've been massive support really, and into March. So if the price was going to stop anywhere, that was a level to watch, and it did turn out to be the case. We've seen a base at 159 on Facebook. What's also interesting though is that yesterday we saw quite the sharp reversal. Opened higher, closed lower, and we've got these old highs on Facebook, 198.200. So the question was, will we see $220 a share on Facebook in a month? I'd be tempted to say no for in a month. I think we could see it, but I just think there's obviously, based on what happened yesterday, let's flip this over to the hourlies. There's obviously a bit of nerves back up at these old April highs on Facebook, isn't there? So I'd be if I was trading Facebook now, I'd be tempted to do nothing, see if we got a deeper sell-off, and see if we get another opportunity to buy in these lows. You know, I think clearly if we clear 200, it's a different story. Suddenly we've got more momentum on our side. But just given that 1 day of price action yesterday, we saw quite the sharp reversal during the day. So maybe it's going to struggle up here near the 200s. Let's see what happens. But it's an interesting that I think that was clearly the better trade was down here, 165, 170. Stops the other side of those old lows. And I think now we're seeing almost the mirror image of this going on. You know, a level that had been good in the past and the same up here, a level that had been a real barrier, 198.200 is doing its stuff again. So it's a little bit stuck in the middle for me, I think, Facebook up here. But let's keep coming back to it. And that's it. I think we're going to wrap things up there. There's no more questions. So we'll do it all again next Wednesday. So like I say, this afternoon, oil inventories at 3:30 UK time. Then US interest rate decision tonight at, I think it's 7 o'clock UK time. So maybe a quiet day. Once we get that out of the way, hopefully things will be a bit more interesting over the next couple of days. But I think oil is an interesting market to watch because maybe we're forming a base above 50. Gold is interesting because it's still strong, but we've got some real hurdles up ahead. And the pound is interesting because we're back to these old big supports. But thanks for coming along. Like I say, we are thinking about what we're going to do with these things, these weekly events that we do. So if you think there are improvements we can be made and you're watching the recording, just leave us a message in the comments down below. And if you like what we do here, if you could just click the thumbs up because it all helps with our magic YouTube algorithms, however they work. Any questions, drop me an email, david.jones@capital.com. But good luck with your trading, and we'll do it all again in a week's time.